Hello, this is Mark from TradeInformed.com. Welcome to this video. How to use Excel to backtest a trading strategy using an ATR stop loss. This video is actually a follow-up to a video that I recorded, an easy way to use Excel to backtest a trading strategy part 2. For those of you that have watched this video, you will see that the spreadsheet on the screen is the same as the spreadsheet at the end of that video. What we've got is data, historical data from the S&P 500 index, and we've backtested two strategies. First of all, buy and hold the index, and secondly, buy the index when it is above the exponential moving average. This video, what we're going to do is we're going to look at a third trading strategy based upon buy above the EMA, and this is incorporating that strategy but incorporating a stop loss using the ATR or average true range. Okay, so the first thing I'm going to do is I'm going to unhide the columns showing the open, high, low, close data. I'm going to format this top set of cells like so. Also, I'm going to start putting in some borders so we can neaten up and make a bit more sense of our spreadsheet. I'm going to put in some new columns here. These columns I'm going to use to calculate the average true range and the stop loss. Okay, the first one we're going to need is the high minus the low, the high minus the previous close, and the high minus, the low minus the previous close. Okay, so high minus the low, we go down a row and we put in the high minus the previous close, and then we put in the low also minus the previous close. Now for these two columns we actually use the absolute value, which in Excel is ABS, the formula. And the reason we do this is that the ATR is always based on a positive number, is always a positive number. Okay, we drag these cells down to all the cells below it, and we do this by double clicking on the bottom right hand corner. Okay, now what we can do in this column is to calculate the true range. And the true range is simply the highest, or in Excel terms the max value out of these three. And again we double click to copy these down. All of the formulas on this video will be available on the TradeInformed.com page associated with this video. Okay, now we can calculate our ATR, and I'm going to calculate the 10 period average true range just using a simple average. Put this to 2 decimal places, and I'm going to copy it down. Now, to calculate our stop loss, we are going to use the ATR, but often we'll want to use a multiple of the ATR. I'm going to start off by putting my factor or my multiple here, which is just 1 to start with, and the formula is simply the ATR multiplied by the factor, and using the dollar symbols to keep the factor the same throughout. Again, we copy this down, and what we're going to put here is the maximum weekly drawdown. This will tell us whether or not our stop loss will be activated for that particular week, and this we can calculate by equals the low minus the close. In fact, what we're going to do is express this as a positive value, so it matches up with the ATR. Okay, so there we've calculated our stop loss. I'm going to insert a new column here. Again, I'm going to put in some new borders. I'm going to call this strategy buy above EMA ATR stop loss. We'll start our trading account with $1,000, the same as the other strategies. I'm going to start it here. Okay, just to very quickly recap, the buy above the EMA strategy would buy the index, buy the S&P index when it closed on a weekly basis above the EMA. What we're going to do here is have exactly the same strategy, but we're going to say that if the maximum weekly drawdown exceeds our stop loss value, then our stop loss is activated and we take a loss equal to our stop loss. Okay, we're going to do this by using, instead of one if function, we're going to use a nested if function, so we'll have two if functions. And the first part of this is exactly the same, so we're going to say that if, first of all, our previous close is greater than the EMA, then we have another if function. Then we look at whether or not our maximum drawdown is greater than our stop loss. Okay, so if it is greater than our stop loss, what we're going to do is we're going to have the close minus stop loss divided by the close. And we're going to multiply that whole sum by our balance of our trading account. I'm going to put these in brackets just so we're clear on which part of the formula goes where. Okay, so if we don't hit our stop loss, we will do the same as the previous trading strategy, which is divide this week's close by the previous week's close. Again, put the brackets in, and then we multiply again by our trading balance. I'm going to close the if function, the second if function, and if neither of these conditions are met, we will do nothing, and then close the first if function. Okay, so there we have it for the first week. We double click here and we've copied it down to all the cells below. Okay, what we had calculated over here was the actual value of the trades. So I'm going to put in another column here, just copy and paste the name, again put in some borders, and this is simply the current week minus the previous week. Copy this down, and on our final set here we've calculated our maximum drawdown, and again all I need to do is copy the formula across here and then drag it down. Okay, now I'm going to scroll all the way down to the bottom here, and what I need to do is just highlight this whole row here and copy it across, and there we have the comparison of the three trading strategies. What I would like to do now is add in one other metric to compare the trading strategies, one that I particularly like actually, which is often called the profit factor, or it can also be called the profit and loss ratio, and this is the absolute value of the total wins divided by the total losses. Again, I'm going to copy it across here. Okay, what I would like to do now is we've got all our data in one spreadsheet. I'm going to move the results into another page of our spreadsheet. I'm going to put some borders around here, and I'm going to copy the names of the 3 strategies here. Okay, so there we have our 3 strategies. We can see that, as expected, the EMA ATR strategy, it returns a pretty similar total net profit over the 60 odd years that this trading strategy was operational. But interestingly, and what I particularly like, is that our largest losing trade is less than half of the trading strategy that we didn't use a stop loss, and almost a third of the trading of the buy and hold the index. Okay, there's one final thing that I would like to do, and this is we might want to adjust our stop loss. So I'm going to put in I'm going to call it the stop loss factor. I'm going to put in the cell here, and I'm going to replace, I'm going to scroll here, scroll to the top. I'm going to replace our stop loss factor here. Put this in as 1, and there we go. So we can adjust our stop loss factor from 1 to 1.5 times the ATR. You can see it's the most significant thing is it's increased the largest size of the largest losing trade. We put it to 2 times the ATR, and again our largest losing trade unsurprisingly increases. So there we have it. We've got another trading strategy. We've incorporated an average true range stop loss, and we've got 3 comparable trading strategies that we've quite easily back tested using Excel. For further information, please look up the website www.tradeinformed.com.